My name is Andrew Seguin. I run Seguin Financial, which is a bookkeeping and tax firm located in Cornwall, Ontario. I hope everyone's having a good long Easter weekend, and hopefully you spend some time with your family virtually. It's very important during this time to be social distancing. What I wanted to talk about today was some good news in regards to the Canadian Emergency Wage Subsidy. It has officially passed Royal Assent on Saturday, April 11th, 2020, which means that I can officially talk about it without the rules changing on me tomorrow and the next day. Now, things can still change, so keep that in mind. They've always put stipulations in the tax legislation that things can change, and I'll talk about that later on. So let's dive into it. Nothing's changed in regards to the eligible employers, which is always good to see that it is still valid for individuals, corporations, partnerships, nonprofits, and charities. I won't talk about too much about that. At the end of the day, the only ones who are not eligible for this are public bodies. So keep that in mind. Revenues, they just define this now more in detail. Specifically, is that it's based on regular operations. So they put it down in the system that it's specifically based on arm's length sources, which means that you can't be invoicing your spouse for fake work. You can't be invoicing your sister company, your corp. They're essentially making it based on regular operations. So if you're a hair salon, massage therapist, if you're a restaurant or retail, just based on your everyday, your day-to-day operations. That's how they're going to be determining revenue moving forward. They do allow you, this is new, they do allow you to calculate your revenues based on the accrual method or the cash method, not the combination of both. If you're questioning what both those things are, I'll just quickly define it. If, as a business, if I invoice you March 31st and I don't get paid until April 10th, I'm going to show the invoice and the income on March 31st. So the revenue in my set of books is March 31st. That's based on the accrual method. That's how most businesses are run in Canada. Cash method is that same example. If you paid me April 10th, I'm going to show the revenue April 10th. Now, why is this important? Well, it's important because some businesses have not done a lot of work in March, but because of cash flow issues on their customers, they might not be able to get paid until June, July, May, right? So you might have done the work. Your accounting system might show the income in March, but because of cash flow issues on your customer's side, you might not be able to get paid until later on. So what they're allowing you to do, them being the Fed, they're allowing you to determine whether cash basis or accrual basis is better for you to determine your revenue. Talk to your accountant. I'm going to be saying this a lot through the video, is that a lot of this is dependent on how you're recording your income in your bookkeeping. So your set of books. I'm going to advise you, if you have not set in place today, is to have an accounting solution in place. We use QuickBooks Online for all of our clients. It's a prerequisite. And the reason why we do that is because we can get access to your accounting immediately. And that's going to be very important for the next few weeks while we determine your eligibility criteria. So talk to your accountant, talk to your bookkeeper. If it's yourself, great. Look through your own bookkeeping to determine whether you're eligible based on your revenue and whether cash basis or accrual basis is going to be the method you choose. You can't flip-flop back and forth. So if you are picking one method, you have to stick with that method throughout this whole application process. They do give a stipulation in regards to charities and nonprofits, is that you can determine your revenue to include or not include government sources as part of the calculations. Why is that important? Well, let's say you're a nonprofit that gets 90% funded from your municipal government, and you have some sources of internal revenue, whether it's sponsorships, whether it's advertising, fundraising, whatever that may be. You can actually determine to use the option of calculating your revenue inclusive or non-inclusive of government sources. So keep that in mind as well for any nonprofits who are affected by COVID-19. Amount of subsidy, nothing's changed there. So it's 75% of the amount paid up to a maximum benefit of $847 per week, or it's up to 75% of the employee's pre-crisis weekly remuneration. So what they define as pre-crisis essentially is it's for periods from January 1st to March 15th. So any amounts you pay to your staff from January 1st to March 15th. That's the period. And they want you to exclude any 7-day periods where no wages were paid. That way your averaging is a lot more accurate. So if you have an hourly or a casual employee who gets, who worked for a full week, then they're off, and we work 2 weeks in a row, then they're off again. They want you to exclude those periods where 7 days or more were not worked as part of the averaging. And that's good, right? And at the end of the day, it makes it more accurate for what they typically make. So keep that in mind. They also define what remuneration means. So it's salaries, wages, and other remuneration like taxable benefits that do get source deduction remitted from it. So anything through the Receiver General where there are income tax obligations. And they don't include severance pay, stock option benefits, and the corporate vehicle. So keep that in mind as well. But essentially, it's for regular ongoing services that your staff are providing based on those wages. They also do give a special rule for that do not deal with arm's length with the employer. So that really means like me running my own corporation. That's this stipulation is for someone like me. So it's also for people who are spouses or family members of the owner of the corporation or owner of the sole proprietorship. They're essentially saying that if this person was not being paid prior to March 15th, they're not eligible. They have to be excluded for the calculation towards the subsidy. There's also no limit. We knew that. So there is no limit towards the amount an employer can claim. And we do have definitive answer is that you're expected and they hope for you to top up the remaining 25% of the pre-crisis levels. And it was confirmed yesterday through the House of Commons that it was not required. Finance Minister Morneau does recognize that some employers cannot do the remaining 25%. So it's up to you to determine whether you can or not. Try to do it is what he's saying, but if you can't, it's totally understandable. So you're expected to make your best effort to top up the salaries. Some new information that I've already spoke to my clients about, but it was now officially approved is that the wage subsidy will refund 100% of the employer paid contributions for EI, CPP, QPP, and QPIP. Now, it's specifically refunding for employees who are on leave with pay. So if you as an employer, now I'm going to talk about this more in detail, but if you as an employer decide to bring your staff back on and they're not working, you will get 100% refund of the CPP and EI. Why is that important? I'm going to talk about that later on. And so I would say scroll to the end if that's really important to you. Like if that's the most important information without hearing everything else, which I would say don't do that. You're going to want to hear other things, but I'm going to talk about why that could be relevant to you as a business owner if you've had to completely close down your doors because of COVID-19. So there is no limit. It doesn't affect the age 47. So you would get essentially 100% refunded from CPP and EI and won't count towards the calculations on the wage subsidy. So that's great. It's an extra benefit for employers for sure. Eligible period. So we got a lot more new information here that it will take up a good chunk of this video, and I wanted to discuss this. So before, what they were doing is they were forcing you to say, you have to compare year over year. So March 2020 and March 2019. And only new employers that have started from February 2019 had a reasonable benchmark that they can use. We had no idea what that meant. I had no idea what that meant. My colleagues had no idea what that meant. It was brand new information. So now we have clarity. So we have clarity in that you as an employer can decide on 2 methods now. Regardless if you're a startup or not, you have 2 methods you can use. The first method is still year over year. So you will compare your March 2020 to March 2019. If you're eligible, good. If you're not, you have the second option of choosing. The second option is a average of January to February 2020. You will take your average of January 2020 and February 2020 and use that as an average. So scenario 1 is year over year. Scenario 2 is an average of January and February 2020. Not only that, they've also said, listen, we understand March was a weird month. Half the month was business as usual, right? Like COVID-19 didn't really affect a lot of businesses until March 15th, March 17th, March 20th. So we're going to cut you some slack. We're going to allow you to have a 15% revenue reduction for March and still be eligible for the wage subsidy. So great news. So if you've only been affected by 15%, doesn't matter if whichever you're using year over year or the averaging, 15%, you're eligible for the wage subsidy. Not only that, there's more. If you're eligible for March, you're automatically eligible for April. This is really important for consistency if you think about it, because now we're April 12th, right? If you've kept having your staff on and are thinking, I know I've had a revenue reduction, but I'm keeping them on because, I believe in the government stepping in at this point. Well, guess what? Now you're automatically applied for April. You don't have to reapply for April. So if you're eligible for March, you're automatically eligible for April. Now, you still have to calculate your April revenue reduction, and it is 30% on April and May. So it's 15% for March. It's back to 30% for April and May, because obviously April and May, we've been completely in COVID pandemic mode. So, regardless, at the end of the day, it's 30%. That's their calculation. So if you're eligible for March, you're automatically eligible for April, but you still have to figure out your April determination because you would want to apply for May's, right? So keep that in mind, is that you still have to apply for April. So if you're eligible for April, then you're automatically eligible for May. So always keep in mind that you got to do this calculation no matter what. But if you're eligible for March, you get March and April no matter what. Then if you're eligible for April, you got April, May, no matter what. So great news there. And they go through a calculation of how this works. So I would read it through the Canadian website if that's something you want to know more about. So it is a 15% revenue reduction for March, and then it's back to 30% for April and May. The claiming periods, they do give definitive dates. So claiming periods is for periods of payment, not based on pay period end dates. So if you paid employees, it's based on the payday and the pay stub from March 15th or April 11th, it would fall under the first period. So 15%, and you're going to either use March 2020 over March 2019 or March 2020 against an average of January and February 2020. Note, whatever method you choose, you have to stick with that method. So when I say method, as in if you're using year over year for March, you have to stick with the year over year for April and May. You cannot flip-flop between year over year and an average benchmark. You have to pick one and consistently go down that road. So let's keep going back and forth here. So they do talk about eligible periods, eligible employees. So some more information here. What they're saying is that they have to be employed in Canada, which makes sense, but also that they cannot be without remuneration for 14 days. The reason why they're doing that is they don't want duplication between the CERB and the CEWS, the wage subsidy. So if you have an employee that was off for 2 weeks straight, so 14 days, so without remuneration, they're not going to be eligible for the wage subsidy. So they just don't want you to hire and lay off and rehire and lay off. Essentially, they have to be with remuneration for 14 days straight, at least during each period. So keep that in mind if you're an employer that has a lot of casual laborers. How to apply. So they do give more clarity, is that it is going to be through your CRA My Business portal. So My Business Account portal. We cannot apply on your behalf. So this is some confirmation that we're very positive this is confirmed. But we as an accountant firm, as a bookkeeping firm, cannot apply on behalf of our clients. So you will require to register for your CRA My Business account. The process is not that difficult. I've just sent the link out to all our clients, but you will have to apply. And I would do that because then you can apply for direct deposit. So when this process is open and you are getting the funds, it will be a lot quicker than instead of being mailed out. So it is going to be through the My Business account portal. Compliance, this is new information, and I do want to discuss this. Do not try to game the system, right? don't try to get away with this if you don't meet the eligibility criteria. Canada runs on a trust and honor system during this time, whether it's to the CERB, to the wage subsidy, right? These are, the government has been giving out a lot of money to make sure that business can keep pushing through, the economy can be up and running whenever this is all done. Don't try to game the system. Don't even try to think about it. As a client, we'll determine whether or not you're eligible. And if you're not eligible, there's nothing else we can do, right? It's like, this past royal assent. You can't determine that, oh, it was a weird month because, we had a special project that is not normal. It doesn't matter. It's like, it's based on your revenue criteria, and that's it. So if you've hit your 15% or your 30% in April or May, your reduction, then you passed. If not, then there's nothing else we can do here at this moment in time. So they do talk about the actual specific penalties. So there could be fines, imprisonment. There's going to be anti-abuse rules that be put in place. One of the fines they put down is that it's 25% of the value of the subsidy claimed. So if you bring your staff on, this is why you shouldn't do this, right? If you bring your staff on and you're paying them $20,000 per pay period, and you're getting a subsidy of 75%, you get 6 weeks, 6 pay periods of subsidy, $90,000. Well, add in that extra 25%, when it's all said and done, you can owe them back $112,000. Well, you've already paid your staff all this money, right? So you probably already spent it all. Do you think you're going to have $112,000 sitting in your bank account when this is all said and done? Probably not. So don't even try to do it if you're not eligible for the subsidy. Interaction, we already knew this, but I'll just quickly talk about, is that you can't have both the 10% and the 75% wage subsidy. If you are claiming the 10%, you're going to reduce what you're going to claim on the 75%. There's interaction with the work sharing program. I won't talk about that. I won't talk about the government assistance. And then they go through an example of the wage subsidy. I wanted to talk about different scenarios on the wage subsidy and how it can be relevant for you as a business owner. So even if you've had to completely shut down your business, you have no revenue come in, the wage subsidy can still be there for you and there for your employees. So if you have no revenue, the wage subsidy can kick in and allowing you to rehire your staff back on, bring the 75% of pre-crisis level earnings, and have your CPP and EI reimbursed. So it's possible to bring your staff back on, run them through payroll, and the only cost you might have to pay, depending on your eligibility, your criteria, is the WSIB, right? Depending on that. And potentially employer health tax if you have right now more than $1 million a year in payroll. So most businesses can theoretically bring their staff back on 75% of pre-crisis level earnings and have CPP and EI reimbursed and essentially pay $0 for them. Now you might be thinking, why would I do that? What's the point of that? Well, it's very expensive to rehire your staff back on a few months down the road. It's a lot easier for your staff to be retained and kept today, right? And not only that, depending on what their pre-crisis level earnings were, they might be coming out more ahead through the wage subsidy than they were through the CERB, right? The Canadian Emergency Response Benefit. If you are getting that at $500 a week, it is possible, being on payroll, even at 75% of pre-crisis level earnings, to be getting more through employment. I want to go over a quick scenario. If someone was getting paid $42,000 a year and getting reimbursed 75%, so you bring them back down to 75% of pre-crisis level earnings, their monthly payroll will be $2,625 per month. The CERB is only $2,166 per month. So they're actually getting $460 extra per month being employed through you as an employer, and only still getting 75% of their pre-crisis earnings. So that's scenario one. Scenario two is that you can bring them back on, getting 75% wage subsidy and have them do some off work. That's difficult, right? It's like they're more than getting paid more through the CERB than having them work 5 to 10 hours a week. So So you have two options essentially: is that you don't bring them back on, you status quo, they continue being on the curb, or long term, if your business wants to have an edge against the other competitors, and you can pick up where you left off very quickly, right? That's gonna be very important. Is when this COVID-19 slows down tremendously enough, where doors can open, you're gonna want an edge. And how you're going to do that is by retaining and having your employees still hired. So if you can manage the cash flow, because that's the problem, is that there's still a 3 to 5 week period between when funds are going to get injected to your bank account through the application process. You're going to want to manage your cash flow efficiently. But if you can do that, you can have a slight advantage against your competitors. So it's something to consider. And then there are other scenarios that if you're an employer who your doors are still open, but you have limitations of what you're doing, whether it's takeout, delivery, curbside pickup, you've had a reduction in revenue. Now you have the option of actually increasing your employees' hours, right? So if they're working 30 hours a week or 25 hours a week, now you can bring them 40 hours a week. Because you're essentially getting reimbursed 75%. And you might be thinking, well, why would I do that? There's not enough work for them to do. Well, think about this as an alternative. Have them do the work. You as a business owner taking a step back and finally allowing you to start working on your business. How many times have you told yourself, if I had more time, I would have done that. If I had more time, I'd update my website. I'll get a new logo, new business cards, social media, right? These are things you can start doing now. Getting a point of sale system in place. Start doing online sales, update your website, create a website, Google My Business, Gmail. There's different things you can do. There's so much work. I know personally, I've been working on my business for the last few weeks, even though we're extremely busy. I'm always trying to have time to try to find efficiencies, trying to find workflow processes, updates, right? Different software we can use internally for our firm to help you as a client. I would consider bringing them on additional hours, so you don't have to work 40, 50 hours a week during this time. So you can take maybe a slight step back and allow you to continue working on the business instead of in the business. So something to consider. Again, these are important times and very weird situations that we're in at the moment. So just think about what the potential possibilities are. At the end of the day, I'm always going to be telling clients this, non-clients, people in the communities, talk to your accountant, talk to your bookkeeper. If you don't have any of those two people in your lives on your team, reach out to me. I'd be happy to have a quick discussion with you and how we can help you as a business. There's a lot of different funding subsidies available, whether it's through the emergency business account, emergency wage subsidy, or you personally through the emergency response benefit. We're always staying up to date on this information. And as a bookkeeping and tax firm, we're here for you. We're part of your team. And that's how I tell my team, is that we are living and breathing your business, because at the end of the day, we're all in it together. So reach out to your accountant, reach out to your bookkeeper, have an accounting solution in place, right? It's going to be very, very, very important during this time to have something in place. And this could be one of the things you can work on, whether you personally working on yourself, learning how to do it, or reaching out to somebody to help you with this process. We can do training completely remote, right? We have systems in place that we do all our work remotely. We use applications like Receipt Bank, QuickBooks Online, Knit Payroll, T-Sheets, the list goes on and on. So reach out to me, Andrew at seguinfinancial.ca. Check out our website down below in the corner there. You can call our business lines 343-885-1287. I wish everybody well. And again, I hope you had a very good and enjoyable Easter long weekend. And maybe this information has allowed you to finally have a good night's sleep, because I know this has been a heavy burden on a lot of employers in the community. So hopefully this video has helped you a little bit, and maybe allow you to sleep better tonight. So stay safe. Goodbye.